Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we're going to talk about forms such as bills, invoices, and checks and how they are used within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are within the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be talking about the major forms that will be used. We've touched on those forms as we've looked through the cycles, including the sales cycle or customer cycle, the vendor cycle or the payable cycle, and the employee cycle. We're going to spend a little more time thinking about how QuickBooks puts together the information, the financial statements primarily, using the input information which is generated through these types of forms. So we're going to select the item up here, this little plus item, and we're going to go through some of these major forms within these areas, including the invoice, the receive payments, the checks and the bills and the pay bills, and see how those are used to generate financial statements. To do that, we will be using a QuickBooks file that is already populated with the Get Great Guitars information in it so that we can go to the financial statements and then jump back to some of these forms. Later on, of course, we will be creating this information from scratch from a new company. So if we have a new company file, we won't have the forms yet that have been created. We will construct that. Now we're going to look at basically the end product that has data input into the system already and look at how these forms are used in order to make the financial statements. So to do that, we're first going to go to the reports on the left side. So we are in reports on the left side. Now, some of our common reports that we open often will be down here, including typically the balance sheet and the income statement, because those are going to be items that we are going to use many times. If they are not, we're going to type up here balance sheet, and we'll pick up our typical balance sheet. If we select that item, we can then check the date ranges. Now we're going to be working in a future problem. That's just the nature of working a practice problem. So we're going to say the dates are 01/01/21 to 02/28/21. So this is going to be the years that we're going to put information in, of the couple months that we'll be putting information in. January 1st, 2021 to February 28th, 2021. And then we will run that report. So here's going to be our information. We've got our standard balance sheet information, including the checking account, the accounts receivable, the assets here, then the liabilities, then the equity accounts. So within these accounts, we can actually drill down and see what has been used in order to generate this information. So if we go to the checking account here, we can select this item. This will give us a zoom function. And this is more of an auditing type of function. So we're really looking at the end product now, what has been used, what has been generated by QuickBooks, given the input information, typically that input information from forms. And we'll see how this stuff is being constructed from the completed portion, the balance sheet, and then work it back to the input screens. So if we select the checking account, we get this is basically a general ledger. It's going to give us a transaction detail. It's an order by date. We have our date range. This is the reason that we have the range on the balance sheet being a point in time typically. But when we use this auto zoom function, it'll go back to that range that we have selected. Now it also gives us a nice transaction type over here. And these in essence are the forms. So these are the forms that have been used. Each of these are going to be a data input form that has been used in order to generate this information. Now it is possible for us to use some form different than the data input form that QuickBooks will show, because we'll use some different input settings, but then QuickBooks will still default to these typical forms for typical transactions that happen on a day-to-day basis. The cash account is a great account to look through because there's going to be more types of forms in the cash account than any other type of account, given the fact that cash is going to be involved in more cycles. So if we scroll through this, of course, we've got the checks for the cash accounts, any deposits for the cash accounts that we'll have. We have another check, but it's also a bill payment, which means that we wrote a check, but we wrote it in order to pay off a bill. We wrote it in order to clear out the accounts payable account. We have expenses, and more deposits here. If we select some of these items, if we select this check, this is going to be a Vanguard. Let's check into this. We're going to go to Amazon. If we select this Amazon check, then we're going to see the actual details. So we're selecting that check and we'll see the check number. This then is one of the forms that will be used. So we're going back to the data input screen. We saw these forms as we were going through the process to enter the data. Form, the check typically being kind of part of the vendor process oftentimes, where we would be paying vendors. And here's going to be our furniture and fixture for this check number here. So we'll close this back out. And if we go to the deposit and we select a deposit, let's do a loan deposit. This is a loan that we got. Then we'll see a deposit screen. So here's the deposit screen. Now note that we could have used the deposit screen in a check register and entered it in a different format, and QuickBooks will still basically default oftentimes to the deposit screen, making a deposit from whatever data input function that we used. So this is going back to the input screen. We're going to close this back out. We're going to scroll back down. We've got the checks, we've got the deposit. This one again, a check, but it was for a bill payment. So if we select that item, we're going to get to our check here. It says to be printed. It hasn't been a printed check yet. But it's also a bill payment, meaning we wrote this in response to a bill. So we had to enter the bill first and then have the check that will be printed at a later point, as opposed to just writing the check straight away. And that's a little bit of a differentiation between the two types of checks. They're both checks, but one was to pay a bill and one would be not to, and it'll give us that information. And that'll mean that the check that's there to pay the bill is the other side of it will be accounts payable, as opposed to just a check, which will be paying directly whatever we purchased. Then we have the expenses here and the pay bills as well. So let's go back to the data screen. If we scroll back up here and we look at these items from this side, we've of course looked at this data as we see it through cycles. So we've looked at the check. So if we select this check, this is how the data would be typically input that would then be used to create the check that we saw as we go through here, as we go through the detail. Then we have the bill, and remember that what we're seeing in the cash account is the pay bills. So we've seen the bill payments right here. And that is in response to first having a bill. We enter the bill, that goes into accounts payable, and then we're going to pay the bill, and that's going to be the pay bills here. Then we have seen the bank deposit. So the bank deposit is going to be anytime we go to the bank, we deposit that information. This will be the data input form. So note that if you're working with financial accounting typically and learning accounting, you'll typically be learning the debits and credits. What's a debit? What's a credit? What are the two accounts doing? What's the effect on the accounting equation? When you work with accounting software, it'll typically use data input screens and try to put it in such a way that the day-to-day transactions will be in a format where just about anybody can put that information in, even if they have no idea of the accounting equation or debits and credits or how it will affect the financial statement. That's the point. As we learn this stuff more, we want to get an idea of what are these forms doing, how are they going to affect the financial statements, what are the two accounts that are affected as we enter these forms. As we work with these forms and do the data input, we will take a look at that. We'll take a look at, one, how to do the data input, and then two, how to set up the form in order for the data input to be used, and three, what will be the effect on the financial statements as we create these forms. Let's take a look at the profit and loss statement, and we'll take a look at our major other financial statement and how it is created using the same data input. So we're going to go to reports on the left side. And again, it's probably going to be down here as a report we run often, but we can also just run it up here, profit and loss. This is basically the income statement, what QuickBooks calls the income statement is a profit and loss. We're going to run it for that same date range, 01/01/2/12/02/28/21, January 1st, 2021 to February 28th, 2021, and run that report. So here is our report. We're going to have our income, we've got our cost of goods sold, and expenses. If we select one of our income accounts, we're going to select one. This is product income. This is going to be something that we're going to use in order to have inventory as opposed to service fee income. Actually, let's look at the service fee income first. It'll actually be more simplified. So we'll look at the service fee income, select this item, and that's our zooming down. So we're really going from the end product, the financial statements, going back to those forms that are used to create it. And we saw those forms before by cycle. When dealing with income, we're dealing with the revenue cycle or the accounts receivable cycle. So we have here the sales receipts and we have invoices. When we select these items, we'll see our forms that will be created. So if we select the sales receipt, we'll go through, and here's our sales receipt. The difference between a sales receipt and an invoice will be that one, they'll look pretty much a lot similar, but the difference is going to be that we got the cash in this case. You can think of it as we got paid in the store. So this is a sale that happened that we already got the money for. We didn't put it in the checking account, we put it into undeposited funds. And the other side of it will still remain the same in that we had service income. So we did work and we got paid at the same point in time. At this point, it's not inventory. They brought the guitar in and we did work on it and we tuned it or something. And then we got the money at that point in time and increased the cash, check or cash that we got into undeposited funds. And the other side is going to sales. So that's going to be this item. We close this back out. And the other thing we'll see in sales is going to be invoice. So if we select any of these invoices, it's going to look like a very similar form. This is a form that somebody basically in a store could figure out as they're entering this data. They're going to say, oh, it's an invoice. They fill out this invoice. Here's the customer, Jenny Jones. They're going to enter this data and say what was done, how many hours we have, and it can just generate this form. Don't need to know what's going on. Don't need to even look at this profit and loss that we are looking at this point. But we want to see what's going on here, and later we'll talk about how to set up the invoice in order for this to be generated. So these forms are what we're going to end up using. This will be the same thing, except that the invoice will increase accounts receivable. We have not yet gotten paid. Notice there's no payment field here. This is an IOU. We're sending the bill out. We're sending the invoice, which is our bill, to the client. That means that we hope to get a check in the mail, and the other side is going to that revenue account. So we're going to close this back out. Those will be the major accounts in the sales item for a service item. We're going to go back to the reports up top. Then note the same thing is true if we have inventory. So we're going to sell guitars here. So if we go to this item, which is a revenue item related to inventory that we are selling, we'll have the same forms, the invoices and sales receipts. If we select one of those, it will be slightly different in that the name will be the same, everything will be the same here. It's still going to go to accounts receivable, but instead of having a service item, we're selecting an inventory item, something physical, tangible, typically that we are selling, in this case, guitars. And the reason that's a little bit more complicated is because one, accounts receivable is still going up. Two, sales is still going up. But then we typically often have sales tax, depending on our location, we'll have to deal with, which we'll talk about how to deal with that. And we also have the fact that we have a cost of goods sold, meaning the inventory is going down at this point, and the cost of goods sold is going up, bringing net income down by that cost of goods sold. So this is actually a pretty complex journal entry. The person entering the data, the person that's just basically scanning the guitar, probably does not understand the journal entry, what all accounts are happening. It's actually a fairly complex transaction that's happening when we create this invoice, and we'll take a more look at that. But just note the simplicity of the form. The point is to set the whole thing up so that you can run these day-to-day transactions, have someone input that data who knows nothing other than I just need to collect whatever the invoice says here at the end of the day, because we have the guitar in here perfectly, and the amount's going to show up as it should, and that's the point. So setting up the invoice so it does that, and then knowing what's going to happen on the financial statements once the data input is created, that's really the more tricky part of setting all this up. We'll talk about that as we set up the company. We're going to close this back out, and we're going to go back to the reports. I'm going to scroll back up, and we're going to go back to our report summary. Now the cost of goods sold, that's going to be generated from that same information in terms of invoices. If we select this item for cost of goods sold, drilling down on that, invoices and sales receipt. Tricky thing here, however, is that notice we see that 304 there, but if we select this invoice, we won't see the 304 anywhere on the invoice. And that's going to be one of those items that are driven by the invoice. The invoice is what is used to create that cost of goods sold. It's used by this item here, but we don't want the cost of the guitar on the invoice. So that's a little bit tricky. We'll see how to set that up. Obviously the invoice is used to help get payment from the customer. QuickBooks is also using it as the point in time to record the decrease in inventory and the related cost of goods sold to amounts we don't want on the invoice, but can use the invoice as like the triggering point for QuickBooks to do that transaction. So we'll close this back out and we'll scroll back to the reports. Then if we scroll down, we got our expenses, we've got the bank charges, we've got insurance, we've got interest, we've got internet, office supplies. If we select any of these items, then we'll see the data here. In this case, a check directly for the office supplies. So if we click on the check, it's going to show us that check. And the check clearly is going to be decreasing the checking account. And the other side in this case is going to an expense, office supplies expense. So we're using this form in order to generate this. This form also, of course, can be used to print the checks as well. So we're going to close this back out. Those are going to be the major forms that we'll take a look at. I'm going to go back to the income statement. And so note, we've looked at just some of the key components of the income statement. If we select this drop-down item, which has our normal forms on it, this little plus up here, we've looked at basically a lot of the information for the normal customer process, the normal vendor process. These are going to be the things that happen on a day-to-day basis. If something happens on a day-to-day basis, QuickBooks will typically want to put something together to make that process as easy as possible. Those things will be forms. Those things are going to be data input forms, which should be as easy as possible so that we can have someone go in that doesn't know anything about QuickBooks, train them to input that data input form, those transactions that happen on a daily basis very easily. And those include things like an invoice that's going to happen all the time. The receive payments is something that's going to happen all the time. We're going to have the sales receipt is going to have something that's going to be there that's going to be happening a lot. And then we've got the expenses, the check, the bill, the pay bills, all things that are going to happen a lot. And then hopefully every night we have a deposit that's going to happen a lot. Therefore, those things are going to have transactions that will be running all the time. Those things are the things that QuickBooks are going to use forms for in order to generate the end product, the financial statements. Now, anything that's not a day-to-day transaction, anything that we have that is more uncommon, like we take out a loan or we purchase a large equipment, we get a car or a forklift or something like that, those aren't day-to-day transactions, and therefore there could be a little bit more difficult because we don't have a set form to do those transactions that don't occur all the time, and therefore we might have to set some other process up. Typically, accountants would think first thing would be the journal entry would be if there's no other process to set up the information, we fall back to entering a journal entry. Note that all the forms we have gone through are, in essence, a journal entry, meaning two accounts will be affected. QuickBooks is debiting and crediting accounts, making some accounts go up and others go down in a balancing format. But we can look at it because of these forms in such a way that we don't need to know debits and credits even from the data inputs point or jump into the financial statements. If we look at some of the more typical accounting documents, such as the trial balance, then we'll see the debits and credits that will be created as we generate this information. Hello, in this presentation we're going to talk about forms within QuickBooks Pro 2018. If you've been following along with us, we will be continuing with the Get Great Guitars problem. If you have the backup, you can restore that at the File and Restore here. There's a presentation showing how to do that in a prior presentation. We have the View tab open or the Open Windows tab open, which can be found at the View drop-down and Open Windows tab. Only open window at this time is the Home tab, which can be found at the Company dropdown and the Home page. We are going to be talking this time about forms. Forms are going to be crucial types of information within QuickBooks. And again, they kind of have their own term. When we think of QuickBooks and we think of forms, we're really thinking about a lot of these driving documents within the home page. The bills, the invoices, the receive payment, the create sales receipts. All these things are going to be types of forms, and typically we can think of them as printed forms. However, they're also really important to see within the QuickBooks system, because whenever we look at the data, it's typically going to be driven by forms, meaning when we enter the data, unlike what we do when we think about like theory in terms of accounting classes, which we do with debits and credits, forms are the driving documents that really enter the data, that the data is driven by the inputting of the forms. And then QuickBooks uses that information to create the journal entries that we kind of learn within the financial accounting. That's why these forms need to be set up with the lists items here, and that's why that's one of the more complicated items to set that up. It's also why once set up, the forms are easier to use. It's easier for us to enter the forms and then just let QuickBooks do the calculations in order to generate the financial statements based on those forms. In order to look at that, we're going to open up the balance sheet and the income statement and jump back and forth from them to these forms a bit to get an idea of what we mean here. Going to select the drop down up top for the reports, scroll on down to company and financial, and I typically start by going to the balance sheet. So I'm going to scroll down all the way down to the balance sheets, the second half of that drop down, and select OK. And then instead of changing this date, I'm going to check the date, the customized report up there where we will have a date range, selecting this item. And that'll help us to drill down on any particular item we want to drill down on and see the detail from a date range perspective. That date range being 01/01/21 that's January 1st, 2021, the year we will be working in, and 12/31/21, December 31st, 2021. So January 1st, 2021 to December 31st, 2021, and we will then select OK. So there is our balance sheet. I'm going to open up the profit and loss as well. So we're going to go to the reports up top, come down to the company and financial, and we're selecting the profit and loss standard, the first one. Same dates. I'm going to tab over here and select 01/01/21, January 1st, 2021 to 12/31/21, December 31st, 2021. So there is our profit and loss. Now, if we go back to the home page then, we can see that some of these items will be used to drive that profit and loss. And these are going to be the forms. So when we see the forms from this side, for example, if we were to see a bill and we click on here, we're going to see a bill. Looks a lot like a check. If we look at a prior bill, then here's one for Edison. We generated the bill. 648 is the amount, and the other side going to the utilities here. And note there's no debits and credits here. We're not making a journal entry. We're not telling any account to go up or down specifically. What we're doing is just filling out, in essence, this form. And this form then is what will be used in order to generate the financial statements. If I close this was a form 648, and we go to the profit and loss, and scroll down to the expense section and look for this utilities item here, that's where it was at. Here's the utilities amount. I'm going to use the quick zoom feature of QuickBooks and just double click on this. Great feature. We're going to double click and we're going to go from the end result back to what was used to generate it. In this case, there's the bill right there on 2/28. There's our bill. And you can see the account type. That's what's being used to drive it. That's what's being used to create these financial statements. Double clicking on this 648 will give us the bill. This is why every time, if we really want to understand the system, whenever we create a form, invoice, bill, check, we want to think about what is this going to do? What's this going to do to the financial statements? Because these are the things that are making the financial statements. So this is the bill. We're going to close this back out. We're going to close that back out. If we go back to the Home tab, then you can think of a lot of these types of items as in a similar way. So when we have the pay bills, that's going to be checks. Basically, when we do the pay bills, we're writing checks. So we'll look at that when we look at the checks feature down here. Well, let's look at it now. We have the write checks feature here. And here's an actual check. And of course, if we go back to a prior check and just take a look at one, back to the prior check, this one to the Internal Revenue Service. And it was for $614, and it was for Social Security. So that's going to be the item. And of course, the checks are what will be used to make the financial statement. What is going to happen? Cash should have gone down by this, and the other side of it will be going to the Social Security payroll item in this case. So let's close this out. And if we go back to the balance sheet, and we go to the checking account, double-clicking on the checking account, and we scroll down, we see some of these items. I think this was the payroll check we were looking at here. And we'll see that it says paycheck here. Other types of checks will just be called a check, so they do specialize the different types of checks. But either one of them, like this check here, of course, if I double-click on that check here, it will also be a check form. And that's what's going to be used to drive it. So a lot of times when we decrease the checking account, it's going to be done not with just like a credit to the checking account as we would in financial accounting. We'll see the form. Even if we enter the data in a different format, meaning if we enter the data directly into the register, we're typically, like it was in this particular example, this wasn't actually entered into a check, it was entered into the register. QuickBooks will still use the check form to show that data. So we're going to close that back out, close this back out. Scroll back to the home page, see what else we have here. We then have the customer section. The other types of forms we have are the create invoice, typical form. We click on it. It's a deceivingly simple looking form. If we go back to an invoice, it looks like a very simple form, and it is, and that's the beauty of it. We can make an invoice very easily. I can have someone at the check register or something, or someone making invoices and mailing them out without having much idea of what is going on. However, there's a lot going on with an invoice, and the invoice is what's being used to drive how the forms are created. And we'll look at the invoices later. How to make them is a lot harder than how to enter the data. Teaching someone how to enter the data, not too difficult. Making the format to enter the data, more difficult. And analyzing what's happening to the financial statements and what the invoices are actually doing, a bit more difficult as well. So note what we have. We've got the item, we've got the inventory item, we've got the rate. A lot of things going to happen with this invoice. One is the accounts receivable is going to go up because it's an invoice. And that means people owe us money when we generate it. And we're going to have a sale that's going to go up by the amount of the sale. And we also had to remove the sales tax. So we're going to have a sales tax payable is going to go up from this invoice. And there's also a number that can't even be seen here in that we are selling inventory, a guitar, an Epiphone Les Paul in this case. And that has a cost of goods sold, reducing the inventory in a perpetual inventory system and recording the related cost of goods sold to it. Though that's all happening with an invoice here, and we'll get into how that happens later on when we create the invoice. But notice the actual data input, not too difficult to do. We don't need any journal entries in order to enter all that stuff. Once set up, we just need to enter the invoice. The invoice then generates all that information. If we close this back out and we go, for example, to the profit and loss and take a look at one of those many accounts affected by an invoice, such as the merchandise sales, zooming in, double-clicking on, scrolling down, we can see the major items here are going to be the invoices that are going to be dealing with this. So here's an invoice. I'm not sure if this is the same one, but it looks like it could be. It's the Epiphone here. So we'll double-click on that. And there's an invoice, right? So those are going to be the things that are really, when we drill down on the data, these forms are what we will see driving the data, driving the data input, driving what is really happening within the system. Closing these back out, going back to the Home tab, we also have the Receive Payment. This is going to be an item we're going to click when we get the payment. Isn't something that we typically print out, but it still acts like a form within QuickBooks, meaning if we go back, we can see this item of the Receive Payment item here. This is something that we're going to use when we get the payment, and you're not going to generally print out the received payment, but it really acts like a form in that it's going to be used in order to create the journal entry of the receiving the payment and the reducing of the accounts receivable. So for example, if we close this back out and we go back to the balance sheet and we open up, say, let's just go into the undeposited funds and double click on that, we'll see these items that says payment on it. And that's going to be the received payment form. If we double click on that, it'll be driving these forms. So that's going to be another thing. It's another form that we're just going to be using to drive QuickBooks. It's what's used in order to help us make these financial statements. These are the source documents, the source forms. Closing these back out, going back to the Home tab, hopefully. And then we have the create invoice, or create sales receipt. We did the invoice before. If we click on this, it looks a lot like the invoice, so you'll forgive me for getting them mixed up. If we go back one here, we have the same type of layout except it's a sales receipt, and that means we're going to get payment at the point of sale rather than it going to accounts receivable. All else is pretty much the same, meaning we have a sold inventory in this case, and that means that we're going to get cash, or in this case a check. We're going to credit sales for the $4,500. Oh, we didn't have inventory here. This is rental income. So this is rental income. It's a little bit easier to have the rental income because all we're going to have is the check, and then we're going to credit the revenue, and we don't have to deal with sales tax, and we don't have to deal with the inventory. But if we go back a few more, if we go back to another one, this one is something with inventory. We have the same situation that we did with the invoice with this sales receipt, in that now that we're selling inventory, we've got the sales tax, and this is also generating cost of goods sold and the reduction in inventory as well. So I'm going to close this back out. Then we got the record deposit. So whenever we record a deposit, it's going to look like this screen here. We'll see this screen every time. So I'm going to close this back out and go back to the balance sheet. And then again, wherever we put this deposit, going into the checking account, even if we go directly into the register, it's going to say deposit. And what that means when we click on it, it means that form, that input screen will show up. That's the screen no matter where we put it into the system, even if it were a journal entry, or if it were, well, possibly not a journal, it might be a journal entry, but if we put it into the register, it'll typically still generate this form to drive the transaction of a deposit into the checking. And I even think even with a journal entry, it will probably still do that. I'm not for sure on that, but we're going back to the home page. That's going to be the deposit here. Going down to the payroll. These are going to be the input items as well. So whenever we click on the payroll, this is basically going to generate a check at the end of the day. And we already saw what the check looks like. Once we process the payroll, we will end up with payroll checks, and that will be driving the checks then being the forms that will drive the payroll process. So remember, in summary, the concept of forms are going to be really important. Many of these items within the Home tab are what we basically think of as forms. When we look at them, that we see them as things that we can print out. But the keys to them isn't just that we can print them out. The keys to them are that these are the driving factors. These are the things that we have to put the data into. These are the things QuickBooks will use to generate the financial statements. These are the things that will tell us what exactly those generated financial statements are and how they were created through the naming of these particular forms when we drill down on the detail of those particular forms.